What is going on, team? Good evening to you here on a Thursday. Cinco de Mayo. Gonna have to figure out a margarita situation here today, especially after all the red action. Brutal sell-off today.
Damn!
But, we've been expecting this. And remember, we were up like 900 yesterday, down 1,000 today. We were down 900 or something the day before. Market's been all over the place, and this volatility that we've been warning about for some time, it's here. So, looking for what do you do? What do you do with this? For me, I'm cool with getting it over with. I've been through enough bear markets, seen the .com bubble, seen the 9/11 bubble, seen the 2008 bubble, seen the crash in 2020. Seen it enough times to know that, you know what? If we can get this over with, that'd be great. Okay. So, I'm cool with it. Let's just get it done. Let's just get it done and over with. If we're going to sell off, if we are going to go risk off, if that's what it's going to be, if everyone's going to expect the Fed to do 50 bips per and keep bringing it, then okay. Let's get the selling over with. Everything was crushed today, I think, except for gold. Bonds. We were talking about bonds. The 10-year hit 3+%. So we're talking about like savers. People who are like, you know what? I don't want to deal with this. Up 1,000, down 1,000 in the stock market. Here's 3%. By the way, that's not the silver lining. I'm going to get to that. We're going to look at mortgage rates here. We're going to look at mortgage bonds here in a second. Not going to do specific rates today, but we've got the average came out because it's Thursday. So 3%. Hey, I'll take that. Give me that. I'll take 3%. Forget all this craziness. A lot of people thinking that right now. We have the Dow Jones down 3% today, S&P down 3.5%, NASDAQ down 5%. Oil is still at $108. Glad I got out of the oil trade when I did. Gold hovering around the upper 1800s, so it's doing okay. Bitcoin cryptos absolutely murdered today. 8% down for Bitcoin, 7% for Ethereum, 7% for XRP. Cryptos just crushed today. Just crushed. And so there's a lot of selling going on. Also, mortgage bonds. By the way, Derrick Evans here, NMLS 155010. VA Home Loan Specialist. Give me a call or text. Shoot me an email if you want to buy or refi. That's what I'm here for, here to help. Okay, let's get me out of here. Let's get this out of here. And just a quick plug, I'll be on national TV again tonight, One American News, somewhere in the 6 p.m. hour. They usually put me in like 6:10 to 6:15. But there's only 4 guests today, so we had a little more time, which is pretty cool. Usually there's like 5 or 6. So it could be somewhere in there. I don't know. It's a 6 p.m. hour. I don't know how they're going to edit it together, but it was a good one. We talked about inflation, we talked about housing, we talked about student loans, a bunch of stuff in there. So check that out if you want to support. Appreciate it. And let's take a look at this. All right. This is mortgage bonds. Today was pretty ugly. At a certain point today, we actually got down to this support level, the very bottom of our range. And it wasn't looking very good. It was looking very bad, actually. And we had given up all of the gains from yesterday. The 64 bips we gained yesterday, and then some. But now it turns out, okay, a net gain between the 2 days of 17 bips. Okay. If you told me on Tuesday, hey, between Wednesday and Thursday, you're going to go up 17 bips, I've been like, cool, sign me up. Now, who knew we were going to get the spike? When I told you yesterday, lock. That's why. And then today. But look at the support. Look at the candle. That's a very supportive candle. Buyers were in there. So that is a good sign. I like it a lot because we bought back up to the shoulder over here. Now, what could be setting up, and this is what we're going to talk about here. This is the potential silver lining. Jim Cramer says he sees signs inflation is peaking. Check this out. I'm not going to play this video, but check this out. Jimmy, chill. There's a lot of things that I feel like he's totally honest about, and there's a bunch of things I feel like he lies intentionally. Like, I don't know that you can 100% trust this guy, but he's made a lot of money in the market. He continues to make money in the market for his charitable trust, and for certain things, he's a great barometer because he knows things for decades of experience. He sees signs inflation's peaking. What that really means and what I've been talking about is the possibility that there's no new news. So there's no news that isn't priced into the market. If all the bad news is already in, then you could have a turnaround. And remember, we talked about what that could look like. It could look like a rounding bottom, right? Which is what we were saying, hey, this could be happening here. It didn't. It didn't. But another way that this reversal could take place is if we have a reverse head and shoulders. So shoulder number one right here, head right here. If we kind of do this same thing over here, go up, come down, make another shoulder over here, we've got a really, really bullish looking pattern. And we would expect to see some movement on that. Now, it doesn't mean rates are going to go back to 2% or anything like that, but we could get out of this hole, get out of this hell hole that we've been in.
Hated it.
Be nice, wouldn't it? So rates have stabilized, even though this little trend that we're in is still technically a downtrend. I'm looking at it through rose-colored glasses and calling it a range right here, okay? Because it's all I've got, and it's getting messy here. But bottom line is Kramer could be right. He could be right. What if all the bad news is already priced in? If that's true, then this little dip, this little opportunity in the marketplace, this little sort of slowdown, if you will, changing of the guard as it feels like, if that were true, then it would be very short-lived. And it'd be like a V-shaped type recovery. You know, oh, shoot. That blew that up. It'd be like a V-shaped type recovery. And if that were to happen, that'd be pretty amazing. Let's see, here's one. Yeah, this is one thing I want to point out right now. As I've been telling you from the very beginning, this whole game is rigged. The whole thing with the banks, the government, it's all rigged. And how it's rigged is so that you and me end up paying the most money possible for everything. With the way that the credit scoring models are created and the way that they function, to the way that banks operate through this centralized Fed structure. How could it be if the Fed's raising the overnight rate? And by the way, that should directly correlate with auto loans, savings accounts, credit cards, direct correlation. And here is the PR coming out that, hey, most banks will still pay paltry interest rates. Why? Because the banks have agreed to do this behind closed doors. And that's one of the problems that we've got with the banks. And that's why you can go to like Gemini, for example. We talked about the Gemini US dollar, GUSD, which is paying, I think, 6% now. Let's actually look that up. Gemini exchange. Not Gemini horoscope. No, don't need that. We'll look at their earn rates here, and I'm just curious because, I know it's 6 something. I just have to look at Gemini earn, check it out. For cash, you're going to see up to 8%, but the actual Gemini US dollar is, see that's a curve. Not looking for a curve, looking for the 6.9. So you get 6.9% on the Gemini US dollar. Why? People are like, why? That seems scammy, seems like it can't be true. No, they're just using, this is how banking is supposed to work. Banking's supposed to work that way. They pay you, they compete by offering higher rates than the other guys to get you to give your money to them. That's how it's supposed to work. Well, in today's banking world, they have colluded together to not pay us jack squat. And that's the reason why there's essentially a run on the banks taking place. Anyway, this one's worth reading. Check that one out if you get a chance. Bitcoin chart, no bueno. No bueno. Would love to find a silver lining on this sucker. Love to. But right now, as good as I got is we've got green support down here, and this daily close looked like it's going to break this mid trend line here, this channel that we've been in. It looks like that's going to be broken. And so we'll be erasing those here soon. But, who knows? Anything could happen, but I don't see that happening before the close of that candle. So weekly interest rate. This is the last update for today. So we were at 5.11, and then last week 5.10. And now the average interest rate in the United States, and this includes points, all loan types, down payment types, etc. It's all inclusive in here. So it's a true average 5.27%. And so what that means is you should expect, in general, if you are like a conventional buyer and you're in the best scenario, big down payment, all that stuff, maybe you're getting that rate, as your par rate, maybe a little bit less. If you're not doing like a big down payment, you're getting a conventional loan, maybe you're, a quarter to 0.5% higher than that. If you're VA FHA, you're looking at probably 0.5% to 0.75% below that. But that's essentially how the average forms, 5.27. Now, my prediction was that this would top out at 6.5, but if we get lucky and this turns out to be a pattern that can change things, the reverse head and shoulders, can we get it? Can we make this happen? If we can make that, if that can happen somehow, then we get a bump. And you might actually see rates come down on here. And that would be good. That would show us some signs of normalization, some signs that things are priced in, some signs that everything's going to be okay. But if you just look at the headline, if you just look at what happened in the market, it's an absolute bloodbath. I would not recommend at this point, when we were at 35,000+ and I was saying, hey, you might want to lighten up here. At that point, I think it made sense. Here, I don't know if it makes sense to lighten up here. This might actually be a point where if you were out of the market, you would want to step in and start getting into it, start scaling into stuff. Be a great time to scale into some Bitcoin. Great time. If you haven't bought any, don't know what it is, you haven't gotten into it all, this is a great time to start scaling in. Just a little bit each month, each week, each day, whatever, however you want to do it, but just slowly scale into it. Right now would be a good time. So remember, when markets are down, that's not the time to sell. That's the time to pull the trigger and buy. Not the time to sell. Okay? Everybody got it?
Yeah.
All right. So just a quick silver lining. That was it. That was all I wanted to get today. It's an ugly day. Day was red. Nothing we could do about it. But let's just know that we have, if we're going to get a reversal, a reverse head and shoulders would be the pattern we'd want to see. It's going to be the strongest one. And it is setting up right now on mortgage bonds. So good luck to us. Good luck to us. Good luck to you out there. And I'll be here if you need me. Call me, text me, shoot me an email if you want to buy a refi. Guys, have a great night, and I'll see you soon.